What's the biggest mistake that people make that lowers their credit score and it's easy to fix? Diane's back and she'll explain starting in 8 seconds.
This is Debt Free in 30. Here's your host, Doug Hoyes.
I constantly preach that you should not obsess over your credit score because credit scores were created not for your benefit, but for the benefit of the lenders. And in fact, you can read about it all in my book, page 43. You remember this book, Diane? Best book you've ever read, I'm sure. Now, I also understand that having a bad credit score can prevent you from doing basic things like renting an apartment. So while I don't think you should live your life just to get the highest credit score, I do agree that you should avoid the obvious mistakes that would artificially lower your credit score. What's the most obvious mistake? Well, Credit Counsellor Diane Cunha returns. Diane, welcome back. Ready to talk credit scores?
Yes.
So before we get to today's not obvious mistake, let's lay some groundwork here. If you were to go to Equifax or TransUnion, which are the two credit bureaus in Canada, what are the 5 components that are used to calculate your credit score?
So first one would be your payment history. So essentially it's how often do you pay your debts and are they on time? So they track to say, okay, if your due date is on the 30th, are you paying it by the 30th? Are you paying it after? So they want to make sure that you're paying your debts.
Yeah, and that makes sense. If you're paying late, then that's not a good payment history.
Correct.
So that would be a problem. So, okay, number 1, payment history. Number 2
would be the amount you actually owe.
Again, makes sense. If you owe a lot of money, that might be worse than owing, less. So that makes sense. Number 3,
your credit history.
Again, so not only what are you like today, but what have you been like over a period of time?
Yeah, for past 3-4 years.
That makes sense.
Mm-hmm.
Number 4,
your credit mix.
What does that mean?
So that would be, you don't. Some people that I see, they say, well, why is my credit score not going up? And they'll just have maybe a cell phone reporting. And it's like, well, you have to have a cell phone and maybe a credit card, maybe a loan of some type. It's essentially just to show I can manage all of these debts and the proper way of paying them, whichever they may be, because loans are more fixed. And
again, kind of makes sense. If all I've got is a cell phone, perhaps you're not as able to manage if you've got a credit card and a line of credit.
Exactly. They'd rather you expand
well.
on that and just say, okay, yeah, I can pay this, 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 and this on time.
Both installment and revolving, and we'll talk a bit about that. Okay, and then number 5 is, so, look, I was able to qualify for something new. That probably means somebody thinks I'm in good shape, so therefore that would enhance my credit score. Okay, so I want to discuss a key factor that was not on that list, or maybe was on the list. I'm going to get your opinion on that, and that is credit utilization. So what is credit utilization?
So a lot of clients don't realize that it does affect your score. So credit utilization is essentially how much of the available credit are you using. So for example, if you have $10,000 available, but you use $2,000, that's 20%, and it's calculated for the score, showing that you're not utilizing all of the credit. Usually I tell clients, they look at, are you managing your debt properly? And the more you have available, the better it is for your score, because we'll get into that.
Well, so that's interesting. So the credit bureaus say there's these 5 factors that determine your credit score, but credit utilization is not one of those factors.
Yeah, it is very interesting. I know a lot of people have mixed thoughts as to what that means, because they're like, I'm using my credit card, I'm maxing it out. What's the problem? I'm still making payments.
So could you make the argument that, well, credit utilization is actually built into all of those things?
Yes, actually it is. It's the amount you owe could be, instead of, exactly like that example with the $2,000 on a $10,000 credit card, I only owe $2,000, but utilizing maybe $8,000, that would actually differ in regards to your score and how it's calculated.
Yeah. So, and that would affect your payment history. Obviously,
Correct.
That affects the amount you owe, $2,000 versus $8,000. And if it's been happening over a period of time, then that would affect your history and can affect the mix and everything else. So
that's right.
So credit utilization, simple enough concept. Here's what my authorized limit is. Here's what I'm actually borrowing. That is the utilization percentage. So that concept only applies to revolving credit.
Correct. Because I mean, if you look at it, you can't, if you had a mortgage, you can't, your payments are $500 a month. That'd be a nice mortgage.
That'd be a great mortgage to have. Where are you living, man? Sheesh.
So if it was like $500 a month, you can't say, well, you know what? I'm going to utilize a little bit more of my mortgage and borrow more for the bank. It doesn't work that way. That's set as a loan amount, $500 a month. You can't decide to spend $700 on your mortgage, right? So it's only used on revolving credit, like credit cards, lines of credits, that kind of thing.
Yeah. So your cell phone bill, okay, that's not revolving credit because, again, you can't go to the cell phone company and say, hey, I would like to borrow 5,000 minutes this month. That's not a thing.
Yeah, they charge you based on usage.
Yeah, it's and it's not really credit, I guess.
Yes,
it's a monthly fee. So
exactly,
a mortgage would be an installment loan.
That would be installment.
A car loan would be an installment loan, and
Exactly.
I guess in effect you are using 100% of it. Because I borrowed this much, and as of today, this is how much I'm supposed to have paid back. So my utilization is 100% of my installment loan.
Yeah, which is probably why they have the different topics, the different categories of revolving, installment, open, that kind of stuff.
I think that makes perfect sense. And again, I understand that you could have a line of credit secured by your house, which is kind of like a mortgage.
Mm-hmm.
But in that case, that potentially could be a revolving type of debt because I can revolve it. I can borrow more. I can borrow less.
Exactly.
Okay, so credit utilization, which is the percentage of the credit I'm using, only applies to revolving credit. Who cares? Why does this matter? Why are we doing a show on credit utilization? What's the big deal here?
So essentially, I'll give you two examples. So about 2 weeks ago, I had two separate clients, two different appointments, both ex-clients. So they both succeeded. One finished their bankruptcy and one finished their proposal.
So not really ex-clients. They've graduated.
They've graduated.
They've done what they were supposed
Previous
to do.
clients, not ex-clients. That sounds terrible.
Yeah.
Okay, so the first one called in and she finished her bankruptcy in this past July. And I typically tell clients, you know what? Check your credit reports after you finished your consumer proposal or bankruptcy to make sure everything's right on there because you don't want this popping up with errors when you're in the future applying for something. So that's what she did. She contacted me. We didn't sit down together. I talked to her on the phone and I said, let's check out your report. I said, well, do you know what your score is? And so mind you, she filed for bankruptcy. She is completely finished. And as of July, and she said her score was 686. And I said, that's a fantastic score. Oh, what are you doing? And she's like, well, I listened to what you said. And I was just like, hey,
wow,
tell
that's
Doug
pretty
that.
good.
And
Yeah,
Ted.
someone listened to what you said. That is fantastic.
So what I typically tell clients is, you know what, if you get a credit card, first, always make sure you have some savings so you don't end up using a credit card for emergencies again. So avoids that, which is what she did. And she got the credit card and was just using it for gas. So she was utilizing a little bit of it, but she was also paying it right away because we did talk about, we never know when these companies are reporting to the credit bureau and how it's going to affect your score. So every month she would see, so when I pulled up the TransUnion, it would say she owes nothing, but it also showed payment. So it's showing usage. So her score was up to 686 after a bankruptcy.
Yeah, which is pretty good. And we've talked about this on the show before. The minimum score you can possibly have is 300. I've never seen anything that low. And the maximum is 900. I've never seen anything that high. Right. And a good score is in the 600s. A better score is in the 700s. Mm-hmm. And a fantastic score would be in the 800s. Right. If you've got a score of high 600s, low 700s, well then you can qualify for a decent interest car loan, a mortgage, depending on whether you've got a job and all the other things too.
Right.
So a score of 686, less than a year after completing a bankruptcy, that's pretty good.
Right.
And so in that case, keeping the utilization down was the main thing that she did to increase her credit score.
Right. And then I had, and I've met with her before. So this was like a process with the consultation and I just had that rapport with her. And then I had an appointment with a previous client that I've never met. He actually finished his proposal same time around July and said, what do I got to do? And proposals are typically 5 years. So he has completed it and he was trying to rebuild. And he says, my score as of now is 602. So I said, okay, well, what's going on? Like, I can't really see your score because what's on your report because we're chatting on the phone. So like, what are you doing with your credit cards? And he's like, I typically carry a balance, 30, 40%. And I said, why? And he said, because that's what you're supposed to do. And I said, that's probably why your score is not higher, because essentially you have to show exactly what you said. The credit reports are strictly for lenders. And what you have to prove to them what has changed since you were in a worse state. So like, for example, bankruptcy proposals, we see people utilizing everything when they're maxed out. He was utilizing some, but with that utilization, it can look like that he can't manage it. So I said to him, pay it off, pay everything off right away. Exactly the same advice I gave to the other client in regards to paying just for gas. I said, just use a little bit of it. And the less you use, the better. But still, you have to prove that you're able to manage credit by using it.
Yeah. And I would take it one step farther to say you want to prove to the lender that you don't need their money.
Exactly.
I don't need your money. I've got lots of available credit. Oh, well, okay. If you don't need our money, then we're willing to give it to you.
Exactly.
Whereas if you're desperate for it, we don't want to give it to you. And that's really what credit utilization is all about, proving that you don't need it. So we have had credit expert Richard Moxley on the show here a couple of times before, episode 284, episode 483, and he advocates keeping your utilization as low as possible. So you raised an interesting myth there that some people think, well, I got to make sure I'm carrying at least a bit of a balance. I should be utilizing 20, 30, 40, 50%. He is a believer in keeping it as low as possible. So, 20% or below.
Right.
0 is better than 20%.
Exactly.
Do you agree with that?
I completely agree with that. I say, if you don't see a change in your credit report, look at your utilization. Are you utilizing everything available? Are you utilizing more than you think you are? Because at the end of the day, we don't know when, let's say, your Visa card is reporting to the credit bureau. Maybe it's reporting that you owe $400, but you said, you know what, I already paid that. Why is that reporting? So that's why I say, you know what, get gas, go home, pay it right away. We have that luxury now.
Yeah. So 0 is the best, but it's impossible because if I go and buy something today, then I'm higher than 0% utilization. And even if I pay it off tomorrow, well, there was still a period of time where I was higher than 0. So I understand that it is not practical to always be at 0. However, I think you just hit on the most important element here, and that is that you cannot look at your statement and go, oh, at the end of the month, I got a $10,000 credit card. I owe $2,000 on it, which I'm going to pay off now. Therefore, my utilization is 20%. Well, no, that's your utilization today.
Exactly.
That's not necessarily the utilization that the credit bureau is going to see, because your Visa, your MasterCard, whatever your credit card is reporting to the credit bureau throughout the month.
Yeah, and we have no idea when that's
we
why
have no idea.
I always just say it's best bet just pay it off, and if that something is reported, at least it might not be frequent. It might say, hey, you owe $50, not, and maybe the other times it says 0. Like, who knows? Yeah.
So if it happens to be that they report to the credit bureau the day after my payment is processed, then my utilization might be close to 0. But if they report 2 days before I make my payment, my utilization might be 50%.
Right.
And that sounds kind of like what was happening in the second story you illustrated.
Exactly. And I mean, and he also thought, carrying a balance in general is good. And I said, why? You're just paying interest. I said, can you afford to pay it off? Yeah. Well, why are you paying interest? Why are you giving your money away? That's silly. And again, it's this myth of carrying a balance is better for your score, which I've never thought that. I don't know, because my parents never did that, and I'm sure their score is fantastic. Like, they never.
We'll run a credit check on it now to find out. Well, and you are, hi, Mom, you are not just speaking theoretically here, because you actually look at people's credit reports all the time.
And honestly, more during this pandemic time, I find I am finding more mistakes even, which are fixable. But yeah, I look at them more so lately, because a lot of people maybe are having the time, you're able to get it for free. People are learning how to get that for free. And yeah, we just help them and figure it out because, you don't want to be stressed over something you don't need to be stressed over.
Yeah. And we're not giving our opinion. We're giving, well, like you did, a couple of tangible stories. Here's one guy who, two people in relatively the same situation finished their bankruptcies or proposals. One of them has a score of 602. One of them has a score of 686. And the big difference is one is keeping the utilization low. The other one is keeping the utilization a bit higher.
Right. And the proposal client, I told him, I was like, this is so bizarre that I'm talking to you about this because yesterday I did it with a bankruptcy client and you'd think bankruptcy, ew, the score. It's like, no, it really depends on what have you done since you filed? What have you have to prove that this won't happen again. And when you file bankruptcy proposal, yes, you're not quite starting over, but you kind of are. It's a fresh start. That's what we talk about all the time. And it's talking about, let's use a little bit and don't use it for emergencies. Like that's the big mistake that many people do as well.
So let's talk practical advice here.
Sure.
So I think you've already given what I think is the most important piece of practical advice, which is keep your utilization low throughout the month.
Correct.
So you do not have to just pay your full balance at the end of the month. You can be making payments every week. You can be making payments every day if you want. It's all online. You go to your app, you go to your computer, make the payments.
Exactly.
So target as low a utilization as possible if your goal is to have as high a credit score as possible. So, okay, now practical advice. I got another idea. Tell me what you think of this.
All right, let's go.
So utilization is a mathematical formula. The total amount I've got or the amount I'm borrowing divided by the total amount I'm authorized for.
Correct.
22,000 out of 10,000 is 20% utilization. What I should do then is go out and get 10 more credit cards of $10,000 each so that now I've got $100,000 of available credit. And if I'm only borrowing 2,000, my utilization just went down to 2%. What do you think of that? What do you think of that idea there, eh?
I don't like that idea at all.
I didn't think you would.
No, I mean, the problem with that, or even getting an increase on your credit, the problem with getting more credit cards is, I asked this question. I got this question asked a lot by clients saying, "What do you think if I get a second credit card?" And I said, "Okay, well, how are you doing with your current one?" And I'm not doing bad. And I said, "Okay, and what's the limit on it?" It's 10,000. Okay. Why do you have 10,000? What is the need for $10,000 limit? Bring that down. Bring it to like 3,000. You don't need a high limit. And if they get multiple, it's the potential of one, you might be using that for an emergency, especially if you have that available to be like, ooh, I want to have 100,000 available. Let's just reno my house and I'll just put it on there and I'll worry about it later. And that's where now your utilization is becoming further, but also it's just risky to yourself because you can't afford to pay back what you borrowed. And if you were authorized that amount, that would be absolutely insane.
Yeah. And I think, sure, mathematically, the more available credit you have, the lower your utilization will be, but that is horrifically risky.
Exactly.
Because not only for things like identity theft and if someone steals your identity and racks up your credit cards, but the temptation is there that, well, I got all this available credit. Why don't I use it?
Right. And they tell people that. They say this is great for emergencies. And I tell people the reverse effect of that because I said, when you did, because we see clients all the time that have different credit cards maxed all out and typically, I don't know if I mentioned this on the show before, but the 3 reasons why we see people is job loss or income reduction, relationship breakdown, or health related. Most people fall into all 3, if not 2 out of 3. And when you're in that situation where you've maxed everything out, your utilization's completely 100% or close to it, you go to the bank and say, hey, can you help me? Like my payments are great. I've never missed a payment. I've been with you for 18 years. Can you help me out with a loan? What's their response? Nope. You're on your own. And and it's annoying because they tell you, use this for emergencies, and that's what you do. And that's what we want to avoid that. So use only a little bit of your credit just to show I'm able to manage this. I'm able to live a lifestyle with using credit, but I'm not relying on it for my living expenses.
For emergencies. And again, we have talked about this on the show before. Right. Cash in the bank. That's a really good strategy.
Exactly.
As opposed to anything else. So I think you've got to be holistic about this and say, okay, what is the reason I have one credit card or two or three or whatever? And it may be that, well, one of my credit cards is used for business and it's a company account and my boss is paying for that. Okay, well, then it makes sense to have two credit cards then, I guess.
Exactly.
Or maybe it's like, well, I've got a credit card through my main bank, but I have a second one as a backup just in case there's some computer failure or something, or I'm traveling in another country and there's an issue. Okay. That's not a great answer, but okay, I can understand that then. Maybe there's one credit card that gives you a lot of points when you buy groceries and another one that gives you a lot of points when you buy stuff online. Okay. Again, that seems like justification to me, but fine. If you've got a plan, then I'm not going to criticize it.
Yeah.
But then stick to it.
Exactly.
There has to be some bigger picture there, I think. So
exactly.
Okay, so you're not a big fan of this idea of getting as many credit cards as you can. And of course, the more authorized credit you have, that can eventually depress your credit score, obviously.
Exactly. Just not even the utilization, but just showing that it's like, why do you need this much credit?
Yeah. So I go into the car place to get a car loan and they go, well, you've got access to $100,000 worth of credit on your credit cards. We're afraid that you might rack those up and not be able to pay for the car loan. So we're not going to give you a car loan. Well, that doesn't seem fair. Look at all the authorized credit I've got. Yeah, that's when it becomes a disadvantage. So not a good idea. So, okay. You didn't like that idea. How about this idea? I don't want to have a lot of credit cards.
Right.
So why don't I apply for a new credit card with a higher limit? Okay. And then cancel the one I've got. So therefore my authorized limit becomes lower. Like it's higher overall because I had a $5,000 credit card, which allows me then to apply and get a $10,000 credit card. Well, now I got $15,000. Maybe that's too much. Why don't I just cancel the $5,000 one? So now I've got a $10,000 limit. What do you think of that strategy?
Well, I mean, the problem with that is that history is a part of your score. So, I mean, if you've had a credit card for 10 years, you're showing you've managed that credit card properly because the list of even payments and whatnot for 10 years. If you cancel that out, well, guess what? That's gone because they want to know what's currently happening in your life. They don't care what happened to you 20 years ago or 15 years ago or 10 years. So if you close that off, it would say close that customer's request. Well, why? Could you not manage that? Opening a new credit does bring down your score a little bit, but it might bring it down even further because the history is now gone. Yeah.
Yeah. And people get caught on this when the bank phones you up and says, hey, you're a good guy. We're going to increase you from the green card to the gold card, the platinum card, the whatever the next color above that would be, the diamond card. Oh, great. Okay, super. So they cancel the old card, give you the new card. Well, guess what? It's a new card. Mm-hmm. Even though it's with the same institution, you run the risk that it gets reported to the credit bureau as a new card. You
do. It could have that mistake. I fortunately never had that mistake because I've had my credit card since I was 18.
And you're all gold cards anyway, so you're already there. So
I don't care.
Doesn't matter. You don't want to pay an extra fee to have a different color card. You don't want to pay $150 a year just to have a different color.
I don't want to be tapping and people think, "Ew, you have a green card." Nobody cares.
Exactly.
I mean, at the end of the day, it's really looking at what type of rewards you have. Make the card work for you, not the other way around. That's what I tell all clients. And, to think in your mind to fix it, like just remember, use it, but pay it off right away. And then that way your score will go up because you're able to survive without living in credit.
So back to the practical advice then. Mm-hmm. Your most important tip to keep utilization low is exactly that?
So I mean, and if you have two credit cards isn't a bad thing. Pick and keep each maybe about $3,000. I say I don't really see anything more needed than that. And when people ask me, do you think I should do this? I was like, I don't think you should, but also you're an adult. You know yourself better. If you feel like you can have a $5,000 card and not utilize all of it, then go for it. But at the same time, I don't recommend that.
Yeah, what we have seen when we look at people's credit reports is that the sweet spot to get kind of, up to that next level of credit score is to have two different trade lines. So either a credit card, line of credit, whatever, with an authorized limit of somewhere around $3,000 and obviously keeping the utilization as low as possible. So the difference between having two cards with a $500 limit and two cards with a $3,000 limit, well, you're going to have a higher credit score with a $3,000 limit. Mm-hmm. But having two cards with a $5,000 limit doesn't make that much difference compared to two with $3,000.
Right.
Getting it up to $15,000 or $20,000 or $30,000, okay, yeah, maybe it will have a slight increase, but it's getting it up to that $3,000 level for 2 different trade lines seems to be the magic number. And beyond that, it does not make a huge difference. And I know there's tons of people watching this, millions of people, I'm sure, who have access to, their app on their phone that tells them their credit score every 10 minutes,
right?
Which is great. That's a wonderful thing to obsess over, but okay. And I've had lots of people tell me, and I'm sure you have too, that, yeah, you know what, when my authorization went up, it didn't affect my credit score, or it did. It's really that 3,000 that makes the difference. So if you are one of those people who's watching your credit score every second of the day, well, do the experiment for yourself then.
Right.
Lower your authorized limit, raise your authorized limit with the bank, and see if it really makes that big of a difference.
And another thing to note is that typically banks offer you a higher limit because you're utilizing a lot, and they want you to utilize more, because how do they make their money? Off the interest that you're paying. And, again, it's this mentality. A lot of people, I've been doing this for 6 years now. I met thousands of people, and I can literally now say thousands of people that we've helped. Just remember that, that they had all intentions to pay off these cards. It's just that you can't when when you start utilizing everything. And it's like, well, they gave it to me. And I said, yeah, it's a 50-50 thing. The bank offered it and you took it. And the bank expects you to pay interest, for 20 years or whatever it's going to be. And yes, you did use it with every intention to pay it back. But the banks are, they're smart about it. They know they'll start offering you a little bit more when you start owing them a bit more.
Yep, that's the way it works. So, Okay, final question. You've kind of hit on this concept. What if someone is watching or knows someone who constantly has a high utilization? I'm always bumping up on my limit. I'm always at 100% or close to it. Mm-hmm. What's your advice for those people?
If you honestly contact us, I'm not going to say licensed insolvency trustee. No, contact us. Give us a call. Our consults are free. I mean, you might not require our services, but then we can guide you to say, okay, you know what? You have $5,000. Let's help you and say, okay, let's give you a plan. And I mean, it doesn't cost anything. And it's tough to call. I tell every client I find the 2 hardest things in this whole process with us is calling us, booking an appointment, and showing up for that appointment, because it is very hard. It's very, very difficult to ask for help when you're an adult. And financially, you think, I should be responsible for this, but you're claiming responsibility, but you just need some help with it. And credit's so easy to fix, as per these 2 clients.
Yep. Yeah. And the reason you have a lot of authorized limit is because at some point in the past, you were doing pretty well.
Exactly.
You had a good job. The bank was willing to lend you more, and then stuff happened. Maybe it was 2020. The whole world was locked down.
Exactly.
Maybe it was, like you said, lost your job, got sick, got divorced, and now you're not able to deal with all that debt.
Right.
If you have $20,000 worth of credit card debt and you're at 100% utilization all the time, then yeah, that's a problem.
It is. And I mean, that's when, it doesn't hurt to call us and just to see, what are my options? And that's what we do. We do it over the phone. So it's less, I think it's less, it's not less personal, but I think it's easier than showing up in person, right? Because like I said, it's very hard to ask for help as an adult. So, but definitely call us, because we can potentially help you.
And there are solutions out there. So excellent. Well, that is great, Diane. I appreciate that. So final words of advice, I guess, keep your utilization low. That's really what we're saying. There you go. That we could have done the show in 10 seconds. 10 seconds. Keep your utilization low. Excellent. Thank you very much, Diane. I appreciate that. And the reason I wanted to do this show was to emphasize the point that utilization does affect your credit score quite a bit, even though it might not be in one of those 5 things that they mention. And utilization is not just what your statement balance is at the end of the month. It's reported throughout the month. So if you want the maximum credit score and you want to pay the minimum amount of interest, pay your credit card throughout the month, keep it as low as possible. You should be good.
Exactly.
Excellent. Thank you very much, Diane. That is our show for today. Links to everything we discussed will be on our YouTube channel with this video, or you can go to hoys.com and search for credit or credit reports. And as a reminder, the Debt Free in 30 podcast in audio format, while in video format, it's available on YouTube, and in audio format, Apple Podcasts, Spotify, Amazon Music through your Prime membership. I don't know what that means, but we're there.
It's a good membership.
Oh, it's great. And all major podcasting apps. So please like, subscribe, share it with your friends. And as you heard today, we have a lot of important information, so we want to get the word out. That is our show for today. Thanks for listening. Until next week, I'm Doug Hoyes. That was Debt Free in 30.